Is Abraaj closing a chapter in his history, or is this the end of one of the developing world's best-known private equity firms? I'm Bernd Debusmann, and I'm here with Shayan Shakeel, and you're watching Inside AB. So, Shayan, Abraaj announced it's selling its part of its funds business. Do we have details of that sale yet?
We don't have all the details yet. Details will be made available on July 1. What we do know is that it's selling the Latin America, the African business, and the African funds, and the ones in Turkey to Colony Capital. And so this is a pretty significant announcement. It's a huge chunk of Abraaj's funds business. What's going to happen with the rest of it, we're not quite sure. It might sell it off, it might retain it.
So why is this happening? This has been kind of a long-running saga for Abraaj at this point.
Right. Well, selling the funds business it had to happen, to be honest, because Abraaj right now has obligations of about $1 billion that it has to pay and needs to find the cash to do it. It's freed up, and it's happened because it freed up capital requirements for a lot of investors in its fund. So they're pulling their money out. It did have enough cash to pay back its secured creditors. It didn't have enough cash to pay the unsecured creditors, and that's why it had to go through that proceeding in the Cayman Islands that allowed for a stay to be put on claims made by unsecured creditors, which is called provisional liquidation.
Could you explain that term a little more, provisional liquidation?
Right. So provisional liquidation is, kind of the equivalent of the Chapter 11 bankruptcy, the famed term that everybody knows about. So basically what happens is that a third entity comes in, takes over the company, and tries to maintain the integrity of its assets. In provisional liquidation, compared to conventional liquidation, nobody's trying to actually sell the assets off as fast as they can. What it does is give the company a bit more time, provisional liquidation, to restructure itself. In provisional liquidation, what is different in the Cayman Islands especially, is that a third-party provisional liquidator, which in this case is Deloitte and PricewaterhouseCoopers, they're going to come in and take control of the company, but the directors will also be able to restructure the company, which is different from conventional liquidation because the directors aren't all control is taken away basically.
The restructuring process, could you explain that as well? Why, and then what will that look like in the end?
So if you had a business and you needed to pay the electricity bill, you wouldn't dip into the company's savings accounts to do that. If you did, nobody would complain. But Abraaj is one of the developing world's biggest, in private equity investors. And the fund that it is alleged to have taken that out of to pay for some debts was the healthcare fund that Bill Gates had invested in. So obviously Bill Gates and Bill and Melinda Gates, the foundation, wasn't very impressed and they weren't really happy about it. Now what that means is that Abraaj didn't have, proper corporate governance, which in the finance world is quite essential to make sure that things follow the rules and happen between the lines and there's no blurring of boundaries. Investors invest in companies with the assumption that the company is going to exhibit fiduciary trust. That's basically what it is. Now Abraaj breached that trust, and that's why it's having to pacify those investors that by having to split the company into two divisions. One is the funds management division, which is Abraaj, the Abraaj Funds AIML, and the other one is the Abraaj Holdings International, which is basically the operations of the company. Now, there needs to be the operations of the company shouldn't affect how the funds management business runs, and the funds management business shouldn't affect how the company is operated, and that's why that's what needed to happen.
So, I guess the $1 million question, or actually much more than $1 million question, is this the end for them, from what you've understood so far?
Well, the thing is, provisional liquidation is a rescue tool. It's an emergency procedure. The court, obviously, because it's ruled in that favor and has decided not to wind the company up, feels that Abraaj can salvage itself. And there have been a lot of companies that have come back from that kind of bankruptcy, that kind of provisional liquidation. Whether it actually gets to come back or not is really up for debate right now, and probably we don't really have the answers because trust is something that's really quite crucial to a lot of people when they start investing in your company. Abraaj did manage to retain, attract a lot of talent, which gave it one of the best performing, funds across in the developing world, and it's made a lot of progress in a lot of companies and a lot of countries around the world. But things that keep recurring are that, for instance, with KESC, Karachi Electric Supply Company, when its sale of that was delayed, Abraaj didn't have enough cash to pay off all of its debt at that time either. And sales do get delayed. I mean, it's a private equity firm. They're basically flipping businesses after having improved them, which is, I mean, it's a pretty reductive way of explaining it. But Abraaj needs to be able to show that the corporate governance structures and best practices are in place, because this isn't change. This is hundreds of millions of dollars, and it's some of the world's biggest investors.
Well, interesting. Well, thank you, Shayan. Of course, this is a developing story. If you want more updates, I suggest you check arabianbusiness.com. I'm Bernd, this is Shayan Shakeel, and you're watching Inside AB. Thank you.